So the first question, give the journal entries in the books of branch A to rectify or passing certain adjustment for the below expenses which have been missed out. Okay. So normal entries have been passed, but only the rectification entries are required to be noted in these cases. So we need to only account them. What are they? Head office. So branch is under the control of head office. Okay. So head office, HO, expenses amounting to rupees 3,000 was allocated to the branch, but not recorded at all in the branch books. So this is relating to head office expense means not a problem. But here it has been, amount has been allocated to branch. So branch that has been given this 3,500 for their expense, but it is not there at all in their books. So we need to account it. Branch assets. So those branch assets, you need to provide depreciation. So depreciation of branch assets which have been kept by the head office has not been provided at all for these 1,500. Branch paid 2,000 as salary to the head office inspector. For an head office person, the branch has paid an amount. This amount has been debited to branch's salaries account. So if that branch has paid a salary amounting to rupees 2,000 to one of their own branch staff, not an issue. But since they have paid to a head office staff and debited to salaries account, we need to reverse it. Head office collected rupees 10,000 directly from a customer on behalf of the branch, but no intimation has been given with regard to the same by the branch, to the branch in fact. Okay, so a branch customer, he should be paying it to the branch. He got the sales effected through branch, but then head office collected the amount directly, but branch was not intimated at all. So they need to know how much of their customers have paid or not paid. So we need to give effect to this transaction again. Number 5, a remittance of rupees 15,000 has been sent by branch. Amount, what to say? It's on its way. So remittance of rupees 15,000 sent by the branch has not yet been received by the head office. Okay, it's still not received by the head office. Branch A incurred an advertisement expense for rupees 3,000 on whom? For another branch B. Yes? Yes. Before we go on to the solution, is the question clear, students? Yes? Shall we proceed?
Yes, ma'am.
So one by one. So we are just journalizing it because the question asks is whatever has not been effected or whatever has been posted wrongly, please pass rectification entries or adjusting the amount. So only the rectification journal entries is the question. So very simple one. So directly I went on to see it. So now let's try it before we read the solution. Okay, head office expense rupees 3,500 allocated to branch. Whose expense is this? This is amount given by head office to branch expense only for their stationery or for their administration or whatever. Not specific. Head office expense given to branch. Since it is not there, what has to be debited and what has to be credited? Can we trigger our minds so that we can
expenses account debit to head office account.
Very good. So the head office has actually not intimated this to the branch has actually not recorded this. So, but it's an expense of the branch. So we are passing these entries in the books of branch A. So branch A for whom the amount has been given. So for me, if it's an expense, I need to debit the nominal account. So debit all expenses, which is expense account directly in this head to head office. Okay, so to the head office account 3,500. It's like instead of you spending to cash, we generally say to bank, we generally say, but then this is sponsored by or given by head office. So to its head office. Very good. Next was also the same way. Depreciation for a branch asset, not head office asset. So need to be recorded by the branch, but not provided. How do we do this?
Depreciation account debit to head office account.
Very good, Naina. Very good. So depreciation account, which is 1,500 to head office account. to the head office account 1,500, not provided earlier, which has been kept by the head office only. Yes. Now branch paid 2,000 as salary to a head office inspector, and this has been debited wrongly to branch's salaries account. So how do I rectify this? It's not recorded, but wrong ledger. Not my staff salary. If it's my staff, branch staff, then salaries can be debited. But it's not my staff. That is the branch's staff. Then how do I rectify this?
Head office account debit to salaries account.
Yes. So it should be an head office expense. So I'm debiting head office to salaries, reversing. Earlier I had debited salaries, so I'm reversing to salaries. Very good. So 2,000. So all the entries have been effected. Yes. Anybody having doubt? Others? All can give in your views. No, it's like testing your own self. Yes, Harish. Somebody was about to say something. Yeah. Now, head office collected 10,000 from a customer of the branch, but branch did not know. How do I do this? Collection by head office. Amount has come into the branch's head office account. Now, branch has to record this. How can it be done? Had the branch recorded this, they would have collected the cash or bank. 2 debtors they would have written. Now the cash has come into the head office account. So they have recorded the entry. So I need to debit the head office 2 debtors. Okay. So 2 debtors for 10,000. So the amount has come in. So I need to reverse. So the amount has come in and sitting with the head office. So head office 2 debtors, reversing the old customer. They would have maybe probably put an entry as cash to branch or something, cash received on account of branch or something. But now you are debiting head office 2 debtors, reversing the old debtors account. Yes, yes, students. Understanding, not understanding. How do I take the silence as?
Clear, ma'am.
Yes, yeah. Now I said on travel. This amount is on travel. Branch has sent it. Head office has not received it. That solves the problem. Okay, but it's not that not going to be received at all. Probably, okay, probably at the close of the period, this has not been received. Okay, so remittance has been sent by branch, but not received by the head office. Probably they have not given you any information with this amount has not been recorded, or this amount has been wrongly recorded, wrong ledger recorded, nothing such. You are required not to pass normal entries. You are required to pass only the rectification entries. So since no information with regard to wrong ledger or wrong amount, no effect needs to be given to this. Okay, it has been sent but not received as the information. Nothing like rectification. Okay. Now, branch A incurred advertisement expense for 3,000 on behalf of branch B. So this is not with regard to head office, but how do I handle 2 branches ledger? This branch A incurred advertisement expense on behalf of branch B. Though it doesn't involve head office here, what is important to note in a branch accounting is you need to route it through head office. Imagine there may be, for a particular company, there may be more than 100 branches throughout the country. So we cannot probably open many branch account, right? Branch A may transfer to branch B, branch B may receive from branch C, branch B may incur some expense for branch D. There may be multiple branches. How many ledgers of branch can we open and keep? Every branches for that matter. So in branch accounting, irrespective of how many branches it has or doesn't have, it is always advised to pass such inter-branch transaction through the head office account. So you just, for the expense that you have incurred of the amount or pending to be received or to be given, route it through head office. Okay, when you route it through head office, what happens? this branch A has incurred an advertisement expense on branch B. So you debit the head office. So head office account to whatever amount has been spent to cash or bank 3,000. Okay, so don't put branch B. There may be branch C, branch D. There may be multiple branches. So you just route the entry through head office. One common account for all the branches. But mention in your narration, it is an expense incurred for branch B. Okay, clear? The entries, the narration, the amount, the understanding part, the logic, everything. So you can check the entries. Yes or no, students? Yeah. So
yes,
all
ma'am.
what has been discussed. Yeah, thank you. So it is the expense, the depreciation to head office for your branch expense. The salary is not my branch expense. It is the head office expense. So here to salary is reversal, head office debit. Datas, my datas, you collected. I'm routing now. I'm taking it from you. So close the datas. No entry be done for the transit amount in the branch books. Head office to cash for the amount incurred in branch B for branch B. Problem on branch accounting, that is New York. So who comes in? Foreign branch. So we may have also foreign branches, not we are restricted within India itself. So here, foreign branch, a Chennai branch is having a firm in New York. The head office, Chennai is a branch and its head office is in New York. The details are given. What is the important point when it comes to foreign branch accounting?
Exchange rates.
Very good. That's the only crucial thing to be kept in mind. Okay, that's a main crucial thing to be kept in mind. So New York will be recording in their currency. Okay, dollars or depending on their currency they use. So we are recording in rupees. The problem is rate. Okay, exchange rate. So 1 rupee is always not equal to 60 rupees or 60. $1 is always not equal to 60 rupees or 70 rupees. We cannot consider this as a standard one. One day it will be 60, one day it will be 63, 62, 61, and so on. So we need to account for these rates correctly. So there is a standard way of adopting what line item, what rate. Yes. So for certain fixed assets or liabilities and all that, you can adopt the payment date or date of acquisition. If not, be on a safe side, take the opening balance rate. 1st April, whatever has been the conversion rate. So for revenue items and all that, take the average rate. Okay, for current liabilities and all that. So depending on certain classes have been, certain items have been given, adopt this rate. So that's what accounting says. So we have opening stock. So this will definitely be the opening rate. Purchase sales, so revenue transactions, average rate. Debtors, creditors, current assets. So you can probably take the closing rate. Bills receivable, payable, salaries, rent rates, furniture, fixed assets, so opening rate. Bank, New York account. So that is New York account means whose account? The head office account. So they also have owing a credit balance in your books. So now see the closing stock. The opening stock is given in the question. They are saying information with regard to the closing stock as on 31st December was rupees 6,37,500. And the branch account in the New York book shows a debit balance of $13,400. So don't get confused with rupees and don't put this 13,400 matching in line with the rupees amount. This is $13,000. So branch account in the head office books has a debit balance of 13,400 at the year close. And furniture, they're giving you the opening rate itself. They're giving you the converted rate itself. When it is directly given, you just adopt that. Don't be bothered about the rate of conversion. This is directly given. Furniture, which you just saw in the table, the converted rate is $1,750. Now they are giving you the conversion rate for the other elements. Opening, that is 31st December 2001, or the opening is $1 is 52. 31st December 2002, that is the closing, it is 51. The average rate being 50. So 3 rates will definitely be given. Either they'll give you the purchase, whenever some new asset has been purchased, they may give you purchase date. But we cannot expect for every transaction the date of acquisition to be given. Okay, so as a general manner, they may just give you opening rate, closing rate, and the average rate. So the formula says for which line item what rate I have to adopt. So first, we'll prepare the converted. So what you got to prepare is in the head office books. Who is the head office here, people? Who's the head office here? Chennai or New York? Yeah. So in their book, I got to prepare the P&L account and the balance sheet of the branch, assuming integral foreign operation. So in head office books, if I have to prepare, all the amounts are in rupees. I got to convert it to dollars. Also, there's one more important factor for conversion. What is that? We will be knowing whether due to this conversion, exchange rate conversion, have we incurred a loss or a gain? Okay, so one day it is 50, one day it is 51, one day it may be go up to 58, one day it may come down to 49. So due to this currency fluctuation, whether I have incurred a loss or a gain, we'll be able to know. So only when I convert which side is having the deficiency, then that maybe if it's a debit side, it's a loss, credit side, it's a gain. Okay, so first step in such foreign operation, integral operation is first prepare the conversion rate. So I'm just moving on to the working note. So in your thing, you can prepare the working note at one go and then prepare the solution if you're confident of how to approach, or you just give some space for the main answer, start preparing working notes beneath that. Okay, so that's like only if you do this, we can go to the main account. So preparing the calculation for exchange translation loss or gain. So just see. Stock, all the items that we saw, we know the rupees, we know the rupees value of it. So we're going to give the equivalent converted dollar rate. So stock, which rate we will adopt?
Okay. Opening so stock, opening rate.
So I'm just recollecting the rate conversion. Opening is 52, closing is 51, and average is 50. Okay. So 2,34,000 is opening. So definitely opening itself, you need to take the opening rate. So 52 debit. So it's always also stands on the debit dollar. Purchase sales. These are revenue items. Revenue items always adopt the average rate. So debit purchase so much, sales so much. Adopt the rate and divide it. You get debit sales so much. Debit purchases and credit sales. Debtors, creditors. So these are not fixed. These are not fixed assets. For fixed assets, we generally take the opening rate. For current assets, we take the closing rate. Okay, that's the formula. So debtors, creditors are all current assets. So debtors 765 and creditors 510. Take the closing rate, divide it, you get it. Bills receivable, bills payable. Also a what kind of asset is it?
Current.
Current asset. So take the closing rate 51. Divide it, you get the dollar equivalent. Salaries, rent, all are what items?
Revenue
items. So revenue gains or whatever. So adopt what rate for revenue? Average.
Average rate.
Yeah. Fixed assets, opening stock, opening rate. Revenue items are all average rate. Current assets, current liabilities are all closing rate. Okay. So take the average rate, convert it on the debit side. Furniture, I don't have to use these, though I know fixed assets, opening rate, since you told me, ma'am, you don't use any rate conversion because they've given you the rate, converted rate itself directly. So just adopt the same amount here. Then we have bank and New York account. Yes, so bank account amount is 568. We have adopted, it's a current asset. So we adopted the closing rate of 51 debit. New York account, this is the head office account. Here I don't need the conversion because it is clearly stated in your branch, the New York account has a credit balance of 13,400. So just the balance is 13,400. This dollars conversion is given in the question. From where did you get this, ma'am? It's there in the question. So I have not adopted any rate. Now, total the debits, total the credits. The difference is mainly purely due to the exchange rate fluctuation. In my rupees column, it was matching. I did not have this difference. But in the dollars column, the difference is there due to rate conversion 150 to 150. So that since it is here, it is a loss. Exchange due to this conversion, I have incurred a debit, the debit side figure, so it's a loss. Okay, now, okay, the working notes, people. Now we are just going to fit in this dollars amount in the New York books. So they have asked you to prepare what account? Prepare head of
balance.
Very good. Super. So P&L, you all know. How do we start? Opening stock, purchases, closing stock. Before that, sales, profit, then the administrative expenses, and so on. So opening stock, I just converted. Okay, use the working note. Find out, write it out. Purchases, I just converted. Sales, it's just given. All these are there in the working note. We just use the conversion. Closing stock, yes, closing stock is given in the question. We did not find out through working note. It's directly given in the question, 6,37,500. But then closing stock is valued at closing rate. So divide by 51. Here I get the dollar to convert it. The balance is the gross profit. Bring down the gross profit. Brought down. Other administrative expenses like salaries, all this other loss to also be accounted. Exchange translation loss to net profit. Now balance sheet. It's given in the question clearly. So you need to understand the term. Has the branch account in the New York books shows the debit balance. So in New York books, it shows the debit balance. Okay, so they ought to get this amount from branch, right? A debtor has a debit, like we need to get this amount from branch. New York is about to get this amount from branch. So it only means New York has given this amount in the name of capital to branch or something. So my balance sheet is in the Chennai branch, this is a liability. So balance sheet of Chennai branch, it's a liability for me. So head office 13,400. Okay, add the net of net profit. So this is in the books of New York, but balance sheet of the branch account. So add the net profit, which I just found out through my P&L. So much, it's like a capital. Creditors given in the working note, payable given in the working note, all these are there in the working notes. It will definitely tally because we've already accounted for the loss in the P&L. Okay. So the third question is a cost plus profit method of selling, the stock and the debtors method, right? So here the head office wants to sell the goods to the branch at a profit with the profit element itself. So they don't want the branch to know how much profit the head office is actually making. So if I'm selling to customer, my own branch only, but my customer or the goods that we buy, we don't know how much is the cost of the goods. They say 10 rupees, we pay 10 rupees and come. But branch being their own branch, even the head office doesn't want the branch to know what is the cost. So they are selling at a profit with the profit portion itself to the branch. So like how customers are sold at 10 rupees, the branch is also being sent the goods at 10 rupees only. But the cost may be 7, 8. Only the head office knows. So Alpha is a retail shop under the supervision of a manager. The ratio of gross profit of selling price is constant at 25% throughout the year. So this 25% is on what? Yes, 25% GP is on what? Yes, people. You let it be wrong. The gross profit at selling price. See, so 25% is on the selling price. That is 1/4 of selling price. If it is 1/4 of selling price, how much is the cost? How much is on the cost?
1/3, ma'am.
Very good, very good. So 1/4 means 1/3 on cost. 1/5 means 1/4 on cost. So you have actually you can substitute 100, assuming cost to be 100. 1 x by 1 by all that, you put an x and c, and you will get the value. So 1/4 on at selling price. So at is very important. At selling price, it is 25%, and 1/3 on cost. You know, got to know. Let's see what details they have. Okay. Who's the manager? Supervision of a manager. Now, this manager is entitled to a commission of 10% of the profit earned by his branch. So in order to boost up sales, the branch managers will be given commission. Apart from their salary, commission also will be given to make up more sales. What is the commission rate? Commission is calculated at 10% of the profit that the branch makes before charging this commission. How do you generally charge? How do you generally get profit? Sales minus purchase, okay. That is a gross profit. After that, salaries, rent, stationery, all those expense, depreciation, you get the net profit. But before getting this amount, don't include commission. Branch manager is having a commission, right? Don't include that. So don't try to get the net profit, salaries, rent, stationery, branch manager's commission, and then the net profit. Before putting his commission inside the item, calculate the net profit. On that net profit, it is at a defined percentage, 10%. Once you got the amount, now you put the profit, his commission amount inside the P&L account. You get this logic of charging his commission before including it in the account?
Yes, ma'am.
So that's normal commission, which you would earn is 10% of profit. But he's also eligible to get a 25% bonus of commission. Okay. No, he's also entitled 10% before is calculated before, but subject to a deduction. This is a deduction. Okay. If he is making any deficiency in the brand stock, 25% will be deducted. So 10 is a plus for him, 25 is a deduction. So if there is any deficiency in the brand stock, then 25% deduction will be given. And what's it? Sorry. The following details are given to you. So the P&L account is given to you. Opening stock, closing stock. At cost, at selling price. Very important to note. Because we have one calculation, one fourth on the selling price is the profit which it has sent to the branch. So we remember that. So one is valued at cost, one is valued at selling price. Chargeable expense, goods sent to branch at cost, sales made, manager's commission, which has paid so much to, they have paid 2,400, but we need to find out what is the actual commission which is due to him. So from the above, required to calculate the commission due to the manager. So he is entitled to get 10% commission on the profits, but there is a deduction for him. If there is any deficiency in the stock, 25% of it will be deducted. So that two things we need to keep in mind and calculate the commission. So it's just a working note. It's not ledgers, balance sheet needs to be prepared. You're just preparing commission workings. Clear question? Anybody? Question interpretation is there any doubt?
No, ma'am.
Yeah, no, we'll work out. Now, we have gone to first prepare, need to find out if there is a deficiency. What is this deficiency means? We know stock is so much closing and opening. We know sales has how much has been made, how much was sent to the branch, and out of that, how much sales they have made. So the balance lies with regard to the selling price. If we have sold it at a lesser price or so, in order to make up for the sale, then there is a deficiency. Okay, so that deficiency we are going to find out. Now, branch stock account at invoice price. So everything is at invoice price. So the opening stock is given. How did we find out 74,436? It is given here. 74,736. I'm sorry. And this is at cost. So now you need to find out everything at the invoice price. Invoice price means, you all told me, 1/4 on sales means gross profit is 1/3 on cost. So just calculate on, this is cost value only. So 1/3 on that is my invoice price opening stock. So 74,736 original cost plus the profit portion of that. The opening stock at invoice price is 99,648. Now goods, the branch stock account. Okay, how much goods has been sent to branch in the head office books. So goods have actually been sent to branch amounting to 289,680 given in the question. This is at cost. Add out the profit portion on that. 1/3 of 289,680. Get it at invoice price now. Sales will definitely be at invoice price, so there's nothing to be added, whatever is there in the question. By closing stock, this is also actually there. At invoice price, it's given in the question. Do you all note it, or should I go back? Yes, clear?
Yes, ma'am.
Also, yeah.
Yes.
So this is also at closing stock. Now, actually, ultimately, when everything is at selling price or the invoice price, it should balance. Only when some is in opening stock will generally be at cost, sales will be at profit, purchases will be at cost, right? That's how we'll find out the profit. So the difference between credit and debit will give you your profit. I bought it at 8 rupees purchases, sold at 10 rupees. So 2 rupees is my profit, is what you will say as a difference. Here, there should not be any difference. Why?
Because everything is at invoice price.
Everything is at invoice price. I should not, my debit and credit should match. But stock has been at invoice price, purchases or whatever has been sent to branch is at invoice price, sales, closing stock, of course. So, but still there is a deficiency. So then means he has sold something at a lesser price or something. So the credit side is not in line with the debit side. So that's the deficiency which he has made at selling price, which is ultimately a balancing figure. That's the way to find out. There's nothing, there's no other way. So this you have found out what deficiency is made. So you're going to charge 25% for him for this. Okay. Now, that's working note number 1. Now we need to know, we need to give him 10% normal commission. So for that, we need to find out the net profit the concern has earned. So branch account to opening stock. Yes. To goods sent, all this we just found out. By sales, by closing stock. So this still here, no problem. We just move. Now, though we record it initially at the invoice price, this is a concept we have seen in consignment, also in branch. We need to reverse the profit element. Yes, we have recorded, ma'am. It should not be at call. It should not be at invoice price. Yes, but then when you're selling at the when you're selling to the branch itself at an invoice price and not at the cost price, you initially record the transaction at invoice price, but later you reverse the profit element to it. So where are the profits sitting? One is sitting in the opening stock. Clear? That should not be at invoice price, so I need to reverse it. The other profit is sitting at the goods sent to branch. That needs to be reversed. Another is sitting at the closing stock. That needs to be reversed. However, sales will definitely be at the invoice price. Yes, so how many things need to be reversed? The opening stock, goods sent to branch, and the closing stock. What am I talking? Is it making sense, people?
Yes, ma'am.
Yeah. So first pass the initial entries at invoice price, opening, closing, sales, goods sent. Now the next portion of it, and then there is an expense. I'm just going to the problem. Yeah, this is a 49,120. From where did you get them? It's in the question only. So much is the details in the question, so don't worry. So all these are there, 49,120. Now 3 entries reversal. 1 opening stock reversal. So stock reversal will generally take, you need to debit stock reserve account. When I'm reversing the profit element in the opening stock and the profit element in the closing stock, you do it by opening a stock reserve account. So branch account will be the other side of the ledger. So opening stock is a debit, right? So you credit the stock, debit stock reserve. I mean, the to opening stock is how you prepare. So now when you're reversing it, the branch adjustment, the entry is the branch account by stock reserve to the branch account. So what is that? How did I get this amount? Opening stock, 1/3 of 74,736. 99 minus 74, that also one way. Or 74,000 on that 1/3. You get this amount. Yes. So I have reversed 1. Next to be reversed is the goods sent to branch. So goods has been sent to branch. I recorded at the invoice price. When I reverse it, that profit element I need to reverse. So goods sent to branch. So 96 on 289, 1/3. You get this 96 by 6. Now, the third item to be brought down at cost is closing stock. So closing stock is also at invoice price. So 123 into closing stock, we all know it is valued at the sales price only. Okay. So 123, 328 into 25%, not 1/3. Stock or whatever sent to branch is at cost, but closing stock is at sales price only. So 123 into 25% is 30,832. So have you made all the adjustments? Now I find out the balance being the net profit subject to manager's commission. Only if I put in the commission, I'll get the actual net profit. Now this is the net profit which I have computed to find out this commission part alone. Now what is the amount? What is the commission? Kindly bear with the noise for 1-2 minutes. There's mosque nearby prayer goes. Okay. If I'm not audible, let me know. Yes. So we are going to find out the commission due to him, to the manager. So what is his commission given in the question upfront? 10% of the net profit which the branch is earning. So 10 profit, 40, 240 we just computed. 10% is 4,000. There's no extra commission, but then there is a deduction. If he is selling it at any price lesser than what has been asked, 25% will be a cut. But 25% of what? Is it the 25% of what we found out here? That is, we found out 1,280, right? Is it 25% on that? Watch out the question. It says, sorry. 25% of any ascertained deficiency of the brand stock. Yes. So brand stock deficiency is 1,280, 25%. But you all remember something? What is the value at which this brand stock account is prepared?
IP.
Invoice price. So this 1,280 is at invoice price. So it is at selling price. So that is 1,280 is at 25%, reduce it. Not cost means 1/3 you all told me. But this 1,280 is at 1/4 added to it, profit element. So 1/4 has been added to it. Find out what is 3/4 of that. So find out the cost value equivalent of 1,280. Which is 3/4. It has a 1/4 element of profit. Remove it, find out 3/4, you get the cost element. On that 25% deduction. Am I making sense? Yeah, am I too quick? Yes.
Yes, ma'am.
Okay, thanks. So 25% of the deficiency in stock. So 75% or 3/4 of 1,280. 1/4 is profit, 3/4 is cost. So 75%, 3/4 is what? 75%. On 1,280 into 25% is a deduction. So 4,024 I would give him, but since he sold it at a lesser price, I'm only giving him 3,784. It showed in the account that 2,400 has already been paid to him. So balance is what you got to pay him as. The balance amount is 1,003. The last problem, question number 4. Shall I move on, students? Any doubts? Not that nobody is encouraged to ask doubts. You can ask doubts. Yeah, this is a session to clear your doubts and get yourself be confident. Yeah. So Chennai branch submits the following trial balance to its head office at Lucknow. It's a trial balance. Okay, so probably I just have all the details about my assets and expenses. So furniture so much, depreciation so much, salaries, rent, advertising, sundry office expenses, stock, goods received. Debit balances, other debit balances are debtors, cash, carriage inwards. So many has been paid. So it's all the debit items are there. The credit balances are outstanding expenses. Goods received from head office was there. However, out of that, you are sending some goods, returning the goods to head office. That's here. Sales credit balance. Head office is again a credit balance. Yeah. Head office credit balance means they have given you. So 80 is on their account in your books. Branch is having 80 on their behalf. Now you got to prepare the final accounts. Right? That's the question, right? That's question I've not still read. Additional information are there. The closing stock is valued at 62 lakhs. On 29th March, just before the head closing, the head office dispatched goods costing rupees 10 lakhs to its branch, but branch did not receive these goods before 1st April. Hence, a figure of goods received from head office doesn't include these goods. Okay, so branch did not receive these goods. Who sent it? Head office has sent it, about 10 lakhs. But branch did not receive until the beginning, the closing period. Now, that's one. Goods are in transit. The other that is in transit is goods received from the head office doesn't include these goods. Okay, the other which is in transit is 1 lakh has been charged, not transit, 1 lakh has been charged by the head office for centralized services for which the branch has not passed in entry. So something is not in their books, but it is above, should have been received. So that is goods in transit. And the other is there is a charge made by the head office for the branch, 1 lakh expenses, which they did not pass. So you need to rectify these entries, because your trial balance, whatever the figures are shown there, doesn't give effect to these two items. Okay, so first journalize these two entries, then you prepare the final account. So what is the question? You're required to pass the journal entries in the books of branch for these two adjustments. Thus these two other adjustments are all done and trial balance is ready. But only these two adjustments pass, journalize them, prepare final accounts of the branch, including balance sheet. So P&L and balance sheet is required. Question, clarity is there?
Yes, ma'am.
So only start with the journalizing the missing out entries. What is the missing out entries? Goods are in transit. Who has sent them? Head office has sent it. Goods about to come to your plate. So goods in transit debit to head office. The other, you have your expense, they have charged you. So that expenses is your ledger expense account to head office. So 10 and 1. Easy entries, rectification entries, like how we did in the first problem. These are also rectification entries. Analyzing for the adjustment items are done. Next, trading and profit and loss account. Simple. All the amounts are there in the question. I just need to plug it here. Opening stock given, sales given, closing stock given. Closing stock is given at the end of the problem. So nothing for me to work out. What is given is goods so much has been received, out of which so much I returned back. The net amount goods received from head office is only 283. Carriage inwards given, it's a trading item. So carriage inwards, gross profit carried down. Bring down the gross profit brought down. What I have, salaries, administrative expense, depreciation on furniture also given in the question. Rent given in the question, advertising there. Telephone is all there in the question. I just need to arrange, like put it in the order. Sundry office expense given in the question. And this head office expense is what we just journalized. Two entries we journalized. One is goods in transit, which will affect what, where will that effect take place? Your trial balance do not have two entries. One is the goods which are in transit given by the, sent by the head office. The other is the expense which the head office has borne in for branch 10, 1 lakh. So that is an expense item. So it is hitting my P&L. That 1 lakh centralized service system, that is a expense item, revenue item. So it is hitting here to head office expenses, which you just journalized. So I get 24. But the other one, where would it come?
Balance sheet.
Very good. It's a goods closing stock. It should have been as a one of the item in the closing stock, but since you did not receive, you put an entry to that effect. So it does affect your balance sheet. So that's why it did not pitch in here. So I have found out the net profit that I need to move to the balance sheet is 24 lakhs. Now clear? Students, P&L account, is it clear to this extent? Journal entries for the rectification is clear?
Yes, ma'am.
Yeah. Others, everybody? Harish, Megha?
Yes, ma'am.
Yeah.
Yes, ma'am.
Yeah. And then now comes the last part, the balance sheet. So now the balance sheet on the liability side, it said it has a credit owing to head office. So head office, it's like owner putting in money, we write it as what? Capital account. Here we write it as head office account. Add the net profit that you have just earned. So to the head office, add 24. Okay. And when I said, right, goods are in transit. So add them, add the goods which are in transit, because two effect needs to be made to that. One effect will be on the P&L and one effect will be on the balance sheet, or both the effects will be on the balance sheet. So what is the entry that I put in for goods in transit? Goods in transit, which I'm about to get, to head office. So that head office credit, I need to add it, right? This is one effect. The other effect will be on the asset side. Add it along with the stock in hand. And the second entry for the expense. Expense to head office. Expense, 1 lakh, I debited my P&L. The other part of the ledger is head office is need to pay to head office. I owe to head office now. So add it to the head office account in the liability side. So all these are the owings that you owe to the head office. Plus the net profit that you calculated. Outstanding expense is so much. On the asset side, what do I have? Furniture. Furniture, the closing balance is directly given to you at 18. So it means it had an opening of 20. Depreciation was also provided at 2 itself. So 20 minus 2 had given this 18. Not 18 minus 2, 16. Very important. Some people would make a mistake here. Just I'm going back for that case. This is the question I'm showing you, people. On 31st March 2019, you're going to prepare the accounts also for 31st March 2019. So furniture was 18, means that's the closing balance. Depreciation which you had provided for that was 2. So these are all the 18 represents closing balance. If opening had been given as 20, then 20 minus 2. If opening has been given as 18, then 18 minus 2 is correct. Since it says the closing of the furniture is 18, so this you need to definitely assume and understand that depreciation has already been calculated on it. Are you understanding what I'm trying to say?
Yes, ma'am.
Yeah, so don't give 18 minus 2, 16. That's again a mistake. You'll not be able to find out where do I have to balance this 2 for. So 20 minus 2 you got to assume and give as 18. These are all there given in the question. This you just found out. Data are also there. Cash and is also there. Your balance sheet will definitely tally. The journal, the missing out part, you got to fit it with the original trial balance. So that's the crux of this problem. The missing out part will have 2 legs. One either will hit the P&L, the other will hit the balance sheet, or both may hit the asset and liabilities of the balance sheet. So that if you do, it's a problem is nothing else. Nothing. Just plugging in the numbers for the question.